Welcome to the UpStreamLife.com. I'm your founder and editor, Vishal Krishna. Today I'm going to be talking to your favorite VC, 100X.VC I'm talking about. Everybody knows them. They've invested in 105 startups at the seed stage. Many of them have now gone on to Series A. And talking about that success is Vatsal Kanakiya, the CTO and principal of that company. By the way, he's also going to talk about how to scale from India for the world. He also talks about philosophy. He's a philosopher, mind you. And he's also going to tell us the intersection of a place where India is really going today. It's going global, ladies and gentlemen. You have to believe in the Indian startup story. And to believe in the Indian startup story, you need to know about money. And that's where the sponsors of the show come in, Finverse.guru. Finverse.guru allows you to upskill and reskill in finance the fastest. So if you're a commerce student, engineering student, or an art student, doesn't matter. Go get to know about money through this app. Download Finverse.guru in the description below. By the way, enjoy this interview with Vatsal. Vatsal, how are you doing?
All good, Vishal. How are you doing?
I'm so happy to catch up with the founding team member of 100X.VC. We are all in awe of your business because 105 startups have been in your portfolio over the last 3 years.
Public. We have more now.
We have more now, is it? Oh, that's interesting. But by the way, you're the CTO there, but our friendship goes beyond that.
Yeah.
Right? We first met in the US, of course. How have things changed since that meeting in the bus in 2018, and we spent about 2-3 weeks together? And I remember us going from one VC to another and checking out a lot of startups and also helping a few startups from Bombay pitch, right? And we were observers, you and me. What has changed from the Indian startup world ever since then? Because now people talk about the post-COVID and pre-COVID worlds, right? So what's changed in the startup ecosystem?
Yeah, I think it's an interesting question because so much has changed yet so little. What has changed is definitely founders are a lot more hungrier. There's a lot more capacity to take risks in India as compared to say 2018, right? And to dream bigger. If you think about 2018, those few founders would come to the US to pitch to US investors to potentially build businesses in the US. They were the outliers, right?
Yes.
They were the ones who thought, okay, they were thinking beyond the boundary. Is it possible for me to crack the US market? Today, every single Indian founder is thinking, okay, can I build a US GTM? Especially if doing this SaaS, they're doing consumer, doesn't matter, right? They want to build for a global audience, starting with US, India, Europe, right? The English-speaking, more kind of crowd. So it's the ambition of Indian founders has definitely grown a lot since then.
Define hungrier. Is it the ambition that means they're hungrier? What has changed? I mean, you being the CTO there also, you'd realize is it hungrier for the technology to go global, or is it hungrier to raise money, or combination of the both, or bring value to businesses?
A bunch of different things. But say in a 2015-16, 100 crore exit might have been a great exit, right? And we've had if you think like early in Indian startup ecosystem, right, which is late 2000s, early 2010s, most investments were consumer investments, which consumer investments have a general cap to how big they can be. And the rate of growth also depends upon overall kind of the growth of the market, right? The Indian consumer market. So a 100 crore exit, a 200 crore exit, a 500 crore exit outcome was superb, even for investors and for founders. Today, people are not satisfied with a 100 crore exit or 1,000 crore exit, right? People want to build IPO companies, right? They want to build companies which last forever. They want to build the next Apple, the Google, the Infosys of the world.
Indians are thinking like that?
Indians are thinking like that. Founders rarely ever come to us now. In 2018, I used to still see founders coming and saying, okay, what's my exit strategy? I'm thinking I'll do an acquisition at 500 crore, 1,000 crore kind of thing, right? And today, nobody ever says that, right? Everybody is thinking, okay, I have this much is my current TAM, right? This is my beachhead right now, but then my TAM can increase in this way. I can go global, I can do this, I can go public. And there are so many opportunities for me. And founders realize that the world is their playground, right? That it is their time to capture anything and everything that is possible. And they're not limiting themselves to a certain outcome, right? It's uncapped for them.
Absolutely. And that sets the tone of what 100X VC is also, right? 3 years, 105 startups, and there's more, like you said. I hope you can mention some names. And the check sizes have increased as well from you. I remember in 2013-14 when the Y Combinator 500 startups of the world started looking at India. It was like, okay, let's explore India. Now they have India-focused teams. That is something interesting. But you guys have taken it a notch above also. Why just be Y Combinator? Why just be 500 startups? You could also have, there's a larger network, larger world out there waiting to discover these startups, because the 500 startup world or Y Combinator is always about US first. But you guys bring in an entire ecosystem from all over the world, right? That's the pitch day. We'll talk about that in a bit. Talk about the hypothesis in 2019. Why start this? You, Sanjay, and everyone else. What's happened since, and what is it? Obviously, you've talked about the founders being hungry. Has it taught you about how your fund should change or something of that sort? Because your check sizes are increased, and hence I asked that question.
Yeah. So maybe the first part I'll take, which is our hypothesis and what drove us to build 100X. So couple kind of things came together. As all of us gained exposure to the US ecosystem, we realized, okay, it's so much more founder friendly there in terms of, not just as investors, you're working harder with them, but also the terms, right? The actual financial and legal terms are so much simpler. Like you have safe notes there. So one was, we were sure we wanted to make it much easier for founders to fundraise, which is where we brought in the iSafe note, right? The Indian equivalent of the safe note, so that, at that stage, generally investors don't really need any rights. If it's a, 5 lakh check that I've written and the company goes to bust for a general HNI, that's nothing, right? And they should not be wasting time to recover that much time. They'll earn 10 lakh rupees anyway, right? In the time they'll waste to try to recover that money. So
they shouldn't be worried about
so founders should be focused on raising and scaling, right? And so investors should be focused on making sure that money goes to founders as quickly as possible. And they're protected, not that they're not protected, but the focus should always be on enabling founders to leverage the capital and scale faster so that they can actually survive and get to the next round and create something valuable.
Absolutely. And these iSafe notes are just preference shares, right?
Basically.
They're converted only on the first round or something.
Exactly. So they're extremely compliant with Indian law, just based on Indian law only, except they take away all the rights, right? So no board seat, voting rights, put option, drag along, tag along, row 4, row 4, all of that goes away, right? So founders don't have to think about anything. Liquidation rights are standard, and a few key consent matters and information rights. Apart from that, everything goes away. So
that's one of them.
That was one of our intent. And the second we thought was, there are more and more investors, angels, VCs, operators coming in to the ecosystem to invest in startup, which was phenomenal.
Now, right? Look at it, 9 years ago, it would just be a few people from Infosys would be well known and they'd invest. And now we have
so many super angels, so many people investing.
Some founders have made money too in the last 10 years. Yes.
But the difference being, many of them want to be passive investors. They see the upside and the opportunity to create wealth by investing in startups and impact, but most of them may not have the capacity time wise to contribute to those companies, right? And second is, even if they did, right, their ability to actually find those companies, right? Investing is a full-time job, especially in a market like India where there are so many companies. We see 20,000 startups a year, right?
You get 20,000
applications, and I don't believe we're seeing 100% of the market yet, right? So there's a lot more depth to the market, and if you want to be an angel and you want to work with companies, it's just so tough, right? And so what's going to happen eventually is, because it's so hard to find signal from noise, right? Everybody's going to look for the same simplified signals, and so capital chases those top 3, 4, which are kind of obvious
which
signals,
is what the
right?
press also chases, and nobody knows what's happening really down there.
Exactly. So the idea was to create a more kind of base discovery platform, right? Where all founders, the best of the best to the underserved ones, can come and raise from us, and we become the platform from where they're showcased to the rest of the investors, right? So anybody and everybody who now wants to invest in startups, right, they get a discovery platform. They get a set of curated deals saying 100X has put in money, they've put in their conviction and their check into the company. So it's a valid deal, it's a credible deal that I should be looking seriously. So it's high signal for them. So now, instead of looking at thousands of deals, you look at these 20, 25 deals that we're showcasing and say, okay, these are the 4 or 5. I might want to invest in them, right? So it's a lot easier for them, and this expands their scope of deal flow, because initially, like I said, right, you start chasing the simplest or the most obvious signals, right? So then everybody's chasing the same deals, but then with 100x coming into play, we invest in companies that are underlooked, right? Kind of overlooked is the right word.
I mean, people who have not even been shown, I mean, they've not even been given entry.
Exactly, right? Who may not be part of the ecosystem, who may know nothing about this, right? And those founders are building excellent businesses, but they've just not been out there. And then suddenly with 100x coming in, now investors have access to that alpha, right? Which was undiscovered earlier.
You know, when we were talking 2018, it was just, you know, the website was just up, you know, and Sanjay and you and others were just getting things in play. What is the role as a CTO that you played then? I mean, how important is tech for a VC? I see the website is amazing. It's got forms where people apply and then it goes through. How do you typically deal? So, like you said, 20,000 applications. Say, even if you have 2 and 3 analysts for a VC firm, will have 3-4 analysts. They can't look at everything, right? 20,000 is like 20,000 stories that you have to see. And in my lifetime, where I do, I mean, stories on startups and corporate, I can't do more than 1,000, just individually. So how do you do 20,000?
So interestingly, every single deal is looked by the 5 of us only. So it's not like we have analysts or associates screening for us.
And you have time to do this podcast. How do you find time? How is it tech that is
we do build certain internal tech processes and automations which allow us to drive better decisions and better filtering from our end. We want to make sure that nothing slips out. So it's always a constantly evolving process, right? We're also learning from our mistakes. Only yesterday we had a conversation, saying, this is where we're probably missing out or not yet optimizing our pipeline. Now, how can we do that? So now we've been brainstorming on fixing that certain part of it. Where can we use automation? Where can we use people? It's always a balance, but yes, we build a lot of tech internally for that.
Let's start there. You're saying the optimizing part is because the tech is optimized for what you believe is the right filter. And sometimes a particular filter may not apply to a startup, and hence you may miss out on a few things.
So it's not necessarily about optimizing the decision making, because in the end, if I give that over to tech, that's not ideal. It's very subjective, right? Kaun sa company kisko pasand aaya?
Absolutely.
Right? But automating the parts in between, right? The communication of certain processes to the founders, internal communication of deals, follow-ups, all of that, right? How do you streamline that and make sure that it's a very simple flow, both for the founders and for the 100x team to take a call, right? So, I mean, just to give an overview.
I would love to know the overview. How do you look at that?
Generally, you fill up the first form, which is on the website. It's a very simple form, just a pitch deck and a couple more details. Presuming we're interested, we go through each and every deal every 2-3 days, and then whatever we're interested, we just mark it as yes or no, right? Kind of, it's just a simple filter. There's no context added. There's no nothing, right? It's just a black or white, right? Okay, is this something of interest to us? Then yes. If it's absolutely not of interest, then no.
Yeah, right? But how do you do that? Because you've gone from robotics to SaaS to
when you've seen over 50,000-60,000 deals, you start seeing certain patterns. You know what the trends are in the market, what's a competitive space, what's not a competitive space, what's unique, what are signs of a hungry founder, of a good founder. So to some extent, it is tacit knowledge, it is implicit knowledge, which is learned.
That's what's filtered.
Yes. So that is why we don't hand it over to somebody else, right? It's in our hands, because all 5 of us have been working on this for so long now that it's tough to educate somebody else on how to do this. And if you do this, it's not fair on the founders, right?
So if they're filling a form, it's a form filled, and that becomes something which says that, here's an interesting company that you want to look at.
Yes.
And those parameters would be a revenue run rate?
No, not necessarily. We do idea stage and up.
I know. That's why I'm asking. How do you know that? So that means that essay must be really very good.
Again, we've invested in companies where they uploaded a Word doc where they were just blabbering about 50 different things, right? So
but when you met
again,
them, they were good.
It's something we've learned how to find the signal in the noise, right? We identify, okay, there are great. So if I were to tell you, okay, if you want to understand what we look at, right? There's
please.
broadly 5 things that we write on the website as well, right? First, the most important thing we look at is the market. Is the market interesting, unique? Is it cluttered or uncluttered? Is it a large market, right? Everything market comes first. We have an internal saying, right? If the market is great and the founder is okay, the market wins. If the market is okay and the founder is great, the market wins. And if the market is great and founder is great, that's where magic happens. So we are believers in that philosophy, right? That the market comes first. Yes, great founders find the right markets eventually, but when we're investing, right, we want to make sure that founders have some semblance of a good market in hand. So first we look at the market. What are they targeting? How are they positioning themselves in the market? Is it something that catches our attention that, okay, kuch naya kar rahe hai?
But you said going with the hungrier philosophy, is the founder hungrier? Do you see these guys, when they meet you, do they answer these questions or in the format?
Yes, they answer that more in person, right? So see, decks are very shallow. So
that's a business that can be built, communication, right?
Yeah, so that's actually something we work with. We understand that it's not something we're taught in our education system to be efficient communicators, right? To make presentations with our to the point, solid, succinct is the word. And you can see that in me, right? I'm rambling about it.
You've changed. I mean, when you in 18, you were this quiet person or just observing to you're absolutely. I mean, if I thought about you today, you've changed completely because you're razor sharp focus in your communication. But most founders don't know that in their early days.
Yeah.
And that can't be solved, and therefore the problem of having a huge deal flow and also looking at only a few deals.
It's not a problem.
It's a good problem.
It's what we want to do.
Okay.
Right? We are clear we want to dominate that seed stage. We want to be at that top of the funnel for the rest of the industry. That's our whole, we are clear on positioning.
Okay. As a CTO, do you also advise these startups on that tech when they sign up with you?
Yes. That's part of it. So as companies start coming, right, many of them are young students, young founders who may not know how to build things or who may not know how to solve certain problems. So helping them in that 0 to 1 journey of getting a product live, getting that MVP live, going to clients, helping them filter out or figure out, okay, prioritize, that's the word, which features to build first, which not, how to positioning, how to translate that tech into business so you can sell. All that is something I work on with them.
Talk about the first year, a few startups, 10 startups that you did. How was the experience in the first year? What could have gone wrong that would have not led to this moment where 100X is known very well in the market? What are some of the mistakes that as a fund that you realize you shouldn't make? iSafe Notes is great. It's a great thing to give to the founders. Sure. But what were some of the personal learnings internally in the first year that this may not work really?
Yeah. It's interesting. Probably, I think whatever mistakes we made, we've been iterating on it. So made a lot of mistakes early days on the process, right? How to communicate. Initial days, founders were not clear on our model, right? So you had to consistently communicate, okay, this is how we invest. These are our terms. We invest through iSafe. They didn't know iSafe. So we had to figure out ways of improving our communication to them, right? To make it clear to them, okay, we're only a pre-seed, seed stage. We're only a first check investor. This is how we invest. If it makes sense, come to us. Because we don't want founders. We had founders at Series B levels coming to us. Oh, you're a new fund. Let me pitch to you. So we had to constantly figure that out. And that's something we've now learned to do much more effectively through our social media reach, through building a large brand, through content on our website, to make it clear to anybody who's coming to us, right, what they can expect from 100X. I think that was one of the key challenges.
I'm glad you said process and communication is something that all of us get wrong in the first 2 years of starting up, right?
Yeah.
And I mean, it's funny, you guys came from a world of processes and yet setting it up was difficult in early stages.
Whenever you're creating something new, right, you are always going to have to create processes iteratively. It's not like we come with a ready-made process and then it's going to be 100% right. It's just like founders, right? You keep on iterating to find PMF. And even after you think you found PMF, once you start scaling, it starts going away, and then you have to keep changing, evaluating, evolving your processes. So similar to us, right? Kind of thing.
Everybody reads so much. There's so much information. People read about it. People watch, and then they compare us to the US a lot more nowadays, and especially and Bangalore mostly. We'll talk about Bangalore stories in a bit because you moved here. I want to know what happens. I mean, people say that 25 lakh check. Is that enough, right? To the founders out there, who think, oh, with 25 lakhs, I can't do much. I want your counter answer on what can be done at 25 lakhs, provided it's just an idea stage, 2 kids or 2 people in their early 30s maybe. You select all ranges, right, of age groups, right? It's not just for the youngsters. What can they do with 25 lakhs? What will they do? And what do you give them that razor-sharp focus that this 25 lakhs is for your product, it's for nothing else? Is that the hypothesis also?
Not necessarily. We can guide the founders on what we believe would be the right way to use the funds. But again, we invest through iSafe notes. So it's not like we can force them to use our money.
But how do they use it? Generally, 105 companies, how have they used the 25 lakhs? Were these companies that had revenues in the past?
So the first 80 is where we invested the 25 lakh check. At those times, generally our focus was we'd have a pitch day roughly every quarter. So the idea was as soon as our check comes in, that gives them maybe 6 months of runway, 6 to 9 months of runway, which we focus with them on optimizing. Parallelly, we work with them to get them to certain numbers or certain metrics or certain goals, which we believe will help them raise at the pitch day, right? Kind of thing. So generally within 3 months, we were able to say 80-90% of the batch raise further follow-on capital to be able to survive. So the 25 lakhs check we never felt was too little, and founders in our portfolio company at least have not also felt. There's so many.
They build the product, right? They sit and build. They don't go hiring. That means you're saying that
no, they can go hiring as well.
They can do hiring too.
See, in India, you can get a lot done with 25 lakhs. I think. Okay, this is one of my pet topics, and this may digress a bit, but
I don't mind digressing because we are. By the way, we're not scripted yet, so let's do this.
So, but I'm a big anti-dollar person. The dollar hegemony, for lack of a better word in my mind, is something I believe we should be fighting against a lot stronger. The urge to price ourselves in dollars, to raise in dollars, that's kind of what may kill the ecosystem. And there's a bunch of reasons why I have in mind.
You should talk about it, please.
Yeah, this would be a very long conversation. But, my basic funda is when you're raising in dollars as a founder, right? And you're pricing yourself in dollars, then let's say to justify that valuation, you will have to earn in dollars as well, right? I mean, let's say you're doing $10 a month or $10 a year revenue, and then 10x multiple pe somebody values it at $100. So great, you're a $100 company now. But what happens is your revenues are generally going to be in rupees, right? So then when you're saying, okay, I've raised $10 and then valued at $100. Now, rupee, when I raised at $10 at the $100 valuation was at 70, now it's at 80. So to justify that $100 valuation, earlier I had to do 70 or 700 rupees a month ka revenue or year ka revenue. Now I have to do 800, right? Yeah. So, which sucks. And as founders, it makes life a lot tougher for you. And even more recently in this environment, right, the dollar has started getting a lot stronger across all currencies. If you see since 2018, in fact, 2018 May was the first kick from like 65 to 70s.
The dollar is much more stronger now.
And now it's gotten to 83-ish, right? And that's another story on the macroeconomics behind it. But that hurts founders, basically what I'm trying to say. Right. And so we think always in dollars because the ecosystem around everybody values in dollars, and hence I say, okay, I want to raise $1 million round. I want to do a $300 million company, whatever. But in the end, your revenues, your costs, everything is in rupees.
If you're serving India. Yeah.
So if you're actually thinking in rupees, you can get a lot more done. Because when you're thinking in dollars, you're raising in dollars, you're spending in dollars as well, right? You're thinking about spending dollars in SaaS
because if you convert
dollars, you're giving salaries in dollars.
It's much lesser and you feel it's lesser.
Yeah, but like 25 lakhs is a lot of money. And many of these founders, this is something in class 1 we'd ask, how many of you have had or spent more than 25 lakhs in your life ever? And like maybe 2 people raise their hands, right? Out of like 40 odd founders. Because like having $1 million in the bank is a different thing, but knowing how to digest $1 million is a very different game, right?
That's another training that I want to ask you, right? Because we are so conditioned with dollars. When people do their rounds, follow-up rounds, what happens to them? How does it intrinsically change the founder? Does it get to their head? I'm talking in terms of financial, discipline.
Yeah.
Do they lack it? That I see so many of them change because of this dollar economics suddenly.
Yeah, it's not just dollar economics. Yes, when you've raised money, it's tough to understand how to digest it, how to spend it, how to convert it into revenue. But that is where our job as investors come in, right? That's where we're supposed to be active with this, right? It's not just कि मैंने पैसा दे दिया. I mean, sorry for the Hindi, but
no, because that's also the thesis, right? India has many founders across India, speaking different languages. So you're open to everybody coming in.
Yeah, we've invested in founders from Kochi, Indore, Kolkata, Bangalore. I mean, across the country.
You bring this language subject, can I bring something into?
Yeah, sure.
They keep saying that founders who don't know, we all talk in English in the cities, but how do we handle founders from the smaller towns? And I hear a lot of them don't make it because of their communication skills in English, and that I've been writing about for many a year now. How can that be corrected?
That is more of a systemic thing, which will take a time, a while to kind of solve. See, in the end, when you have to think about the VC industry this way, right? When, let's say, somebody is writing a check, when a Series B investor is writing a check, their follow-on investor is a global Tiger or a SoftBank or whoever, right? Or a PE firm who can write a check. Now, those guys only understand English, right? So the Series B guys think, okay, I need to invest in founders who can communicate to those guys, and hence I'll invest in people who only speak English. And then similarly, a Series A guy will think, okay, Series B guys are investing only in English knowing founders, and hence and that's kind of how it works, right? So I think this changes when we have more late stage capital available from Indian investors, right? So now we have A91, obviously Sequoia, Lightspeed, all of them coming with much larger funds, doing late stage investments, which is phenomenal, right? Because the more late stage capital you have from Indian investors, then we don't have to go outside, and hence internally, if we can build companies up until a late stage and get them to IPO without any foreign investors, that means the barrier of communication, where you have to be capable to communicate with investors outside of India in order to build a company, is no longer there, right?
No, I'm glad you said that. We talked about a whole host of problems here. We talked about, don't think in dollar terms, you can get a lot done in 25 lakhs. English is not a barrier. Language is not a barrier anymore. You can come from any background. And today, the Indian ecosystem is at least open to listen to you. Again, like I said, 105 companies, several categories. What's the work? What categories worked? What did not? What type of entrepreneurs worked? Why they did not? Do they pivot? Some thoughts on the color of those startups that you've invested in.
So, 105 companies we've invested across the board, from consumer brands to AI companies, SaaS to D2C to sorry, that's the same as consumer, but to deep tech, AI, ML. We've done deep tech like robotics. We've recently done a company called Think Metal, which does 3D printing of metal parts, right? Okay. So they have a desktop 3D printer where you can print metal. So very broad range, biomedical devices, everything. In the end, sector-wise, we believe there is opportunity everywhere. We've always had a mindset of abundance, right? We believe the world has significantly moved to a mindset of abundance. So every market has opportunity in that sense. So every sector, let me be more specific. So it's not like we shut down certain sectors or we don't invest in certain sectors, but we will have certain directed theses in those sectors, right? On what we may want to invest, what makes them venture backable, does not make them venture backable. Of the 105, I would say about 90% of them are still active and working very well, and we've seen some really great journeys. But I would say our luck has been in betting on the right founders almost every single time.
It's always about the founder, isn't it?
Yes. So I'll tell you, right? So it's an internal thesis from day one, since before we started investing, is the idea can fail, the founder does not fail. And we've backed the same founder twice as well, right? So there's he was 19 or 18 when we backed his first startup, Praveen Kumar. His first company was moving. Unfortunately, things didn't work out. The startup didn't pan out as expected. But he came back to us with another startup, Plug Money, and we backed him in our most recent cohort, right? Kind of thing. So
you backed him. You wanted him to come back, and he did.
He did, and he wanted to work with us as well. And we said, yeah, we'll write a check, and we want to work with you. So our thesis is always, if you like a founder and if they're chasing a good market, it's great. The founder doesn't fail. The idea may fail. The opportunity may not work out. The hypothesis may be wrong. It's not that the founder is rogue.
Yeah, I got it. So you don't meet rogues. Yeah, right. We meet a lot of rogues in the media sometimes, and we write about them too. But the interesting aspect is, these are young guys, or you also bet on people who are 30, 35?
No, of course. We've invested. I mean, see, we don't have any, for founders, we don't have any criteria, okay, they should be this young or this old, or, they should come from certain backgrounds or have certain knowledge or whatever, right? I mean, 60-70% of our portfolio is non-IIT IIM. Right, and many of them are dropouts, many of them are young kids, many of them are 45 plus. It doesn't matter, male, female, whatever you are, right? As long as you have the hunger to build something, you are targeting a great market, and you have the mindset to build a business, we want to back you.
Okay, the other side of 40, you mentioned there are a bunch of 40 plus year olds. How do they handle an idea stage? Is it because they're successful previously at their work, they're able to commit something and do it, or how does that work for them? So
more later stage founders tend to come with very unique insights that come only because of experience in an industry. For younger founders, you generally see very out of the box thinking because they have inexperience, right? They don't know how an industry works, and so they build it up from first principles. Whereas older founders, you generally see, okay, through years and years of observing an industry, they realize, okay, this is where the pain point actually is. So this is where things are broken. There's a very simple way to solve it that I can build it out, right? Kind of thing. And then because they have all these years of building things out, right? They just execute and get it done.
Okay.
Yeah.
Vatsal, you said first principles and insights. How many founders, I've met a lot of founders. I've also worked with founders who use first principles as a subject. For me, it's also rooted in philosophy. It's Greek philosophy of foundation. Foundation of learning is the first principles. But what is first principles in the startup community? Because so many people use it. And I want you to put it out there. Saying, boss, this is what I mean, and this is what I want you to think of when you apply with 100X.
I think, again, it's a very broad question because very subjective to each company, what industry they're talking, what kind of business they're trying to build.
By rule of thumb, what is first principles? What according to you is it? How do you apply?
I think it's just breaking it down into truisms or axioms on top of which you can build a model of how the world may work.
Absolutely.
Right? And which are all perpendicular to each other. So they're not parallel, like, okay, they're basically proving the same point, right? These are all perpendicular. So they all add their own axes, their own dimensions to your thought process. And then you create that kind of multidimensional framework or world out of which you can actually...
And then you operate on those principles.
Yes.
Wow, well said. I think that's something that all of you have to understand if you're watching this. If you don't understand what runs in perpendicular and parallel by means what can affect your market today, what works for you today, what may not work for you tomorrow, on the basis of the business itself. On the tech, is that first principles in tech terms? Would you say founders have to also look at first principles only from the business and revenue perspective or from the tech perspective?
Yeah, actually, these are very tied, right? So when you're a student, you're thinking always... So most students, especially in my college, used to be, okay, what languages am I learning? frameworks do I
Yes.
know, what random projects have I made, right? But
Without
the
really knowing how to apply that.
exactly.
Yeah.
Now the mindset when you're building a business is I'm serving a use case that exists, right? So your first principles are not going to be okay, मेरे को क्या आता है and what do I want to build and will people buy it? It's more okay, what does the market want and how do I get to it, right? Kind of thing. So tech is still driven by business first principles, but of course when you're building a more deep tech product, right, you need to have certain tech first principles, right? What is feasible, what is not feasible, how does a particular product come into play? The first principles behind interaction as well, right? How do you actually drive a certain behavior that you want to create within users? Because not every product is something that is intuitively usable, right? You have to create certain behaviors. Like Airbnb, it's something that created a behavior, right? If you had asked me in 2000, let's say 5 or 6, hey, will you let somebody come into your room and just rent for a couple of days and go? You'll say, why will I allow strangers, right? It's a completely different behavior. But they had to create that behavior, create that experience, educate people on how it's actually supposed to look, right? And kind of fine tune that whole part. So first principles come everywhere, right? You have to kind of cut it down to a better way to put it probably would be Cartesian skepticism or Socratic thinking, right? So Cartesian skepticism about cutting it down until you're at, do I exist?
Yeah.
Right? And then building up from there, right? And Socratic questioning is always about why, right? Kind of keep asking. Also, another way to put it would be how Toyota has the 5 whys, right? In the Toyota manufacture or the managing system, you ask 5 whys, right? Yes. Kind of thing. So those are all basically the same thing. It's about cutting down to the simplest
simplest and easy to do, rather than being confused and running around all the time. It's like, you're right, it has to work in precision.
Yes.
How many of I know technical societies like the Japanese or part of the European ecosystem maybe, or the American ecosystem think like this. But where are we in India about these? When you meet all these founders, are they just software? Chartered accountants.
Sure.
They have domain knowledge, but not this kind of thing. As constantly think. The reason I say this also, you don't want to be a trader when you're building a tech-led business.
So the interesting part is, what has happened is, any philosophy takes time to permeate into pop psychology, and that process has started for this. So I won't say Indian founders are coming day one with that mindset yet, thinking from the ground up, thinking about building businesses and scaling, etc. But let's say from 2010 to today, you can say that psychology has permeated a lot better. So I would say about 70-80% of founders think that way now, right? That approaches kind of thing. They're thinking first principles, they're thinking MVP, they're thinking iterations, right? They're thinking, how do I build a scalable business, a product, right? They're not thinking, okay, meko cash flow chahiye. They're thinking wealth creation, right? They're thinking, how do I create $1 billion worth of business, or let me put it in rupee terms, 10,000 crore, right? 10,000 crore rupee business where I own a significant chunk, right?
Yeah, so where you create wealth and own a significant chunk.
So that mindset has permeated significantly, and I think another 5-10 years, Indian founders will be extremely mature.
I'm so happy you answered this so beautifully, because I usually come to loggerheads with this kind of a question, because a lot of people don't talk about the foundational principles of everything. The reason you exist is also why. Right? Everything that you do, your customer, why did this customer buy your product? Why was this pricing correct? Right? Founders don't think about it, right? Abhi cash aa raha hai, they'll say, oh, I'm done. But it doesn't work that way usually.
Yeah.
Would you also say that in the first principles area, you got to keep experimenting, reiterating rather?
Of course.
Continuously?
Yeah. Founders have to keep learning, and 100X, everybody has to keep learning. Yeah. The world is such a dynamic place, right? I don't know if you've read this book called Range.
No, I'm not. I'll take that as a recommendation.
Yeah, Range is a book on how generalists might do better in real world situation. The basic funda is you can be an expert when it's a closed loop system, right? When there are, it's a closed world where there are specific rules and you're going, like chess is a world which is limited in its scope, right? So just by practicing 10,000, times or whatever, you can generally become an expert in it and do really well. But the real world is generally not limited by a specific, it's very dynamic. And in those cases, you generally want to be a generalist, right? Because generalists would be able to kind of open their mind and do a bunch of different things. So
now you said it, the old world of business also, there were certain things that you could do, you can't do today.
Yeah. It used to be, so old world of business was basically, buy raw materials at 5 rupees, manufacture it at 10 rupees, sell it at 30
and
rupees.
Information arbitrage.
And that
Some
was it.
people had information, many of them
now
did.
It's a lot more dynamic. There's so many business models that are so complex.
Beautifully said.
And you need to be a generalist. You need to be able to think consistently, iterate over your processes, do different things, try different experiments and figure out what works. And that has become a part of pop culture, right? If you'll maybe, let's say 5 years down, when the 2010 kids become 18-year-olds, right, in 2018, that's when we'll start seeing this difference. Yeah? You'll say, okay, the kids I was seeing in 2018 to the kids I'm seeing in 28, very different.
Okay.
2028 kids will be thinking like this, right? Consistently iterating, questioning everything, finding new experiments, trying new things out.
Who's done this? Information out there, or colleges are doing this? I think it's information out there.
It's information out there. I would say it's largely most of these mimetic, inheritance happens through pop culture. This is a function of Shark Tank being a very popular show. If, let's say, when I was a kid, right, KBC was the big thing.
That was the aspiration for middle class.
That was what drove me to, learn more, like increase my general knowledge. And then I started reading newspapers, and that drove my hunger for knowledge, being a journalist, wanting to know more about so many different fields, right?
It's funny, you're a CTO, but you also love philosophy. That's completely important in today's world, right? And most of the founders is because they don't have exposure, and therefore, hence, they're not able to think like that.
Yeah, I think I agree a lot. So that's where we run something called a Gurukul, for example, 100X Gurukul, right? Where regardless of whether we've invested in a founder or not, it's an open program where they apply, and for about 3 months, they get access to master classes with operators, investors, VCs, founders who've been there, done that, both online and offline, where they can learn. So the idea is we want to keep pushing India and Indian founders, give them more exposure so that they know how to build companies. And exposure will come with time, right? I mean, if you ask, let's say, in 90s, if you'd had your parents eat pizza, they would throw this away. And
it's happened to me.
Yeah.
When Pizza Hut opened here in 96, I took them out. My father literally said,
exactly,
what is this place that you brought?
Because they have no exposure to the world, right? But then 10 years later, in 2000, you take them because now they've been accustomed to the Indian Desi version of pizza. And then so it takes time for things to permeate. We have to give India time.
That basically, you're saying we have to give us time. Our founders will learn. There's enough information out there, but there's no excuse people not learning.
The important part is, as an ecosystem, we have to keep pushing and driving. We can't take our foot off the pedal. Say, okay, things are not working, and Indian founders don't understand. I'm gonna invest outside.
Got it. Right? Brilliant.
You have to keep believing and keep pushing and keep deploying capital. And those 1 or 2 winners change everything, right? Now, if you think in the Indian ecosystem, we were an exit-starved ecosystem until Flipkart came along.
14, yeah.
14,
15, 2018 was exit, yeah.
And then suddenly that drove another large wave of capital coming to India, right?
Yeah.
Because now people started seeing, okay, there are exits happening. It's not just deployment of capitalists and unicorns, right? Now we'll have more, now we have IPOs happening. So, okay, there's more liquidity. So you're seeing more successes. So more and more investors want to come into play. And that drives more. It's a virtuous cycle. It's a self-reinforcing cycle.
It 4 years and it's going to be super exciting.
I'm very excited for the 2018 batch of founders. 2028 batch of founders. I know it's like way ahead in the future because those will be they're not Gen Z, they're Gen Alpha. And they have grown up completely in a world of smartphones. They don't know anything else. They've grown up only around startup stories in India because it's post 2010 that startups really became on vogue in India, right?
I would say 15 onwards, mostly.
But that's when they also started being able to grasp what's going on in the world. So they've been brought up in that culture, and so their hunger and their attitude and their way of life is going to be so different.
It's going to be different. And hence you've also increased the check size. Your check size will increase in 5 years too, I'm sure.
Absolutely.
So,
that's the goal.
Of the 105, how many have gone to pre-series A and series A?
I would say about 7, 8 have reached that stage.
Okay. And how many of them would be generating cash and they're good to go?
A lot of them.
A lot of them, right? No, but I would say check out the 100X.VC website to know more information on their portfolio companies. But I'd also want to say that because you mentioned philosophy, I can't let you go without talking about the books you're reading. You're also a fan of history. What are you reading currently? I'm going to read Range. You didn't tell me the name of the author, but I'm going to pick
David Epstein.
David Epstein, okay.
But so I'm currently reading Infinite Jest by David Foster Wallace. It's a book about depression. It's a book about addiction. It's a book about living in post-Nixon capitalism. So it's a book about a lot of things.
It's about what? America decaying or something?
No, not necessarily.
Because post-Nixon era, banking crisis, oil crisis.
So it's just so it was a book written in 1996 and it was hailed as the latest coming of the great American novel. And,
okay. It's a novel.
Yeah, it's a novel. So
look at it.
I can't describe it to you. I think most people
read it. I'll keep that as a surprise for me.
Yeah. Apart from that, more recent reads have been a book called Circe, which is a wonderful, again it's fiction, so it's a wonderful reimagination of Circe, who was a
Game of Thrones lady.
Yeah, she was a witch and a antagonist in the Odyssey, in the Odyssey, right? And it's kind of reimagining her as an independent woman and her journey growing out of and positioning her not as an antagonist but as a protagonist in her own life. And it's a wonderful read, especially for men, because it's tougher and tougher for us to kind of it's always tough for people to empathize with somebody of another gender altogether, right? So it helps you kind of gain perspective a lot better. On the business front, my most favorite book, that's incorrect, my favorite book from last year was a book called DeFi, the Future of Finance. It's an excellent book.
Finance.
Yes, it's an excellent book written which is a great primer on decentralized finance and how...
Is it coming? Is decentralized finance happening?
Yes, I'm a big believer, and I have a very strong thesis and white thesis which would probably take another hour or so.
Yeah, that's another podcast where we want to talk books only.
Just crypto and
probably
DeFi.
By the middle of this year, we'll probably do another one only on books. But decentralized finance is happening.
Yeah, big believer in this space. With the rise of CBDCs, ideally, I would want those CBDCs to be built on public blockchains like Ethereum, like the Australian CBDC is being built on top of that. But I think India is going more of a Hyperledger view, which is a private blockchain. But we'll see how it evolves.
Where's India going to go, private or Ethereum?
No, I think, as I understand, the CBDC pilot is currently happening on top of Hyperledger. If I'm not...
That's like a Hyperledger is a smart contract kind of a thing.
No, it's a blockchain. It's
that's open source.
Open source blockchain. Yes. You can run a private network of your own if you want to, for Hyperledger kind of thing. So that's what as far as I understand, that's what
I will tell founders this. Check out decentralized finance. It's important for you.
Yeah.
Check out Circe to understand. The book is called Circe. Check it out. It starts with a C, right?
CIRCE.
Yeah. And that's for you to... It's also Women's Day. We're doing this.
Oh, yes.
Women's Week, rather. So you want to understand, your partners better. So go check them out. Check that book out. Then you got Zest, you said? The Range.
The Infinite Jest and Range.
Yes, and Range. And I'm going to put them in the description because when it's coming to Vatsal, I got to take it seriously because I know Vatsal reads a lot. How do you find time? 20,000 applications and reading and doing the podcast.
This is basically what I do. So my day is 9 to 9, though obviously it extends until 11. And then that's Monday to Saturday. And then Sundays I do 9 to 5. And then Sunday I generally just go for a walk in the evening. So that's basically all I do.
Mobile here and fitness-wise. Do you get time to exercise at all as an investor?
I probably do, but I don't prioritize it. It's just, I don't know, not an important part of my life. My mental exercise working with founders is a lot more important today right now.
Also. No, I wish you all the best, and I'm really lucky to have you on this podcast. Thank you so much.
No, it was a pleasure. Thanks for having me, Vishal.
Thank you, Vatsal.